Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Adrian Day of Adrian Day Asset Management. Adrian, thank you for coming back on.
Well, good to see you again.
Good to see you too. Okay, let's start out like we always do. And what is your macro view of the world economy and financial markets today?
How long do I have? Obviously the election there's a lot of uncertainty now because the election is obviously an uncertainty. If you look at a lot of the plans that the administration has, are they going to be able to succeed in putting those plans through? That's uncertainty. And then tariffs are a big uncertainty. I think the U.S. economy is weaker than the headline suggests. That's the first thing I would say. The second thing I would say is that the Chinese economy is weak, and there's a lot of pressure inside China, inside the government, for more stimulus. That's a sort of uncertainty. And then, Middle Europe, Germany, the German economy is really weak at the moment. So you don't have a lot of strong economic growth in any major economy at the moment. You've got, and the other thing I'll say, on the big macro picture, you've got central banks around the world, including, of course, the Federal Reserve, but also the Canadian National Bank, Bank of Canada, the European Central Bank, who are cutting rates before inflation is controlled.
Yeah.
So inflation numbers CPI numbers have come down, but they're still well above, this 2% arbitrary target that all the central banks seem to have adopted. So in the US, whatever numbers you care to look at, but we're at 2.5, 2.6, 2.7, depending on what numbers you're looking at. That's meaningfully above 2%, and it's meaningfully above where we were before COVID. But you look at the world, global, according to the IMF, inflation around the world is 5.9%. That's nearly three times. And yet we're cutting rates before we control inflation. So I think the danger is that we're going to get stubborn inflation at the same time that they're cutting rates, meaning we're going to get to negative real rates, which is very positive for gold, of course, and stubborn inflation at the same time as economies are slowing, which means stagflation.
Oh, okay. So you see a slowing of the economy, increasing inflation going forward.
Succinctly put.
Okay. Okay, tell us, you're in the Rule Classroom with us, in the Rule Classroom Plus. That's been a lot of fun. It's great to have you there with someone with so much experience. Tell us about the Rule Classroom.
Yeah, the Rule Classroom is great because, it's a subscription service, but it's not very expensive. But you get, at the moment, three regulars that you get. And each week, one of us does a session normally focused on a particular thing. Joe Mazumder, the geologist, he might talk about porphyries. He might talk about, I don't know what other classes he's had, to be honest, off the top of my head.
Oh, he's done different gold miners. He took 20 of them and broke them down and gave us his top three.
Right. So each week, whoever's doing it, we're each once a month. So I'm once a month. Try to focus on one particular aspect. I did a deep dive one session on the silicon royalty that Orogen and Altius both own. But what I really like about it is the engagement from the audience, the feedback, the crew, the questions, the feedback, the comments are really superb. So it's building a community, which is great.
Yeah, it's a lot of fun. I'm honored to be a part of it, and it's great to be able to get in there and basically ask you whatever you want,
Right.
Yeah, a lot of fun. We'll put a link to the Rule Classroom in the notes down below. We had a few listener questions come in. One of them, actually several of them, were around, you just alluded to it, Orogen royalties. We had a nice little drop in the share price recently.
Right.
Got down to about 90 cents American. Any updates on Orogen royalties?
No, not really. The big thing that people are waiting for is the arbitration with Altius. Just for people who don't know, there's Silicon, which is this huge new discovery in the Southern Nevada that Anglo Gold has made, and there's essentially two royalties on it. Orogen, a small company, has a 1% royalty on part of it, and Altius has a 1.5% royalty on potentially a larger the whole district. But the extent of that royalty is under arbitration at the moment. And not the royalty on Silicon, but the royalty on the expanded area. And so the next catalyst, if you like, is likely to be the results of that arbitration, and that could come anytime. We don't know when, but anytime. That doesn't directly affect Orogen, but I think once the arbitration is decided, then Altius will move quickly to get bids, to get firm bids on its royalty, which will also put Orogen's royalty in play.
Okay. We also got some questions on some of the majors with the election results coming in. For whatever reason, people didn't think that I think I was talking with Albert about this, and maybe it's more so that we got an answer and we didn't have in American politics in the election, we didn't have a long drawn out who's going to be president, going into January. We know we got our answer. Gold dropped off a little bit. Where do you see the majors playing into this?
An awful lot depends on gold, of course.
Mm-hmm.
I personally would have been more comfortable. Let's put it that way. I'd have been more comfortable if we'd have had a deeper correction.
Yeah.
If we'd have gone back to 2,500, let's say where there is support, not deep support, but there is support for gold at the 2,500 level. If we had come down there and traded there for a little while, I would have been more comfortable. The fact that gold recovered so quickly and we're basically back to a new high, makes me a little bit nervous, frankly, that we haven't finished a correction. But the thing I say, so I'm answering your question, but the fundamental thing is what happens to gold. And the fundamental thing about gold, to me, right now, is that the reasons people were buying gold for the last 2 years, whether central banks buying because of weaponization of the dollar or Chinese buying because they're afraid of the fragility of their own banking system, or whether it's a U.S. guy worried about interest rates dropping when inflation hasn't been controlled, those things haven't gone away. Those things are still there.
Yeah.
And so the reasons people were buying gold for the last 2 years are still intact. And so I think the pullback and the quick recovery demonstrates to me that there was a lot of pent-up buying on the sidelines. I mean, let's face it, gold moved up very, very quickly without a correction.
Yeah.
And so there were inevitably people waiting, always chasing higher, waiting for that pullback. You finally got the pullback, and I think the fact that it bounced back so quickly just tells us there were a lot of people on the sidelines. So obviously the gold price is the main thing that will affect us, the seniors. And then beyond that is costs. If oil stays more or less where it is, costs are going to be quite controlled and the margins are going to start expanding. So the first 3 quarters of this year, we had cash flow growth each quarter, which you would expect with the higher gold price, of course. Be disappointing if it didn't. But the gold sector is the sector with the fastest cash flow growth this year of any S&P subsector. If we finish a year, I think if gold stays more or less where it is right now, we should have a very good end to the year with the oil price where it is, with the gold price where it is. The thing about the seniors, you're looking at whether it's Barrick or Newmont or Agnico, Pan American, when you have so many assets around the world, there's always going to be a problem at one of them.
Yeah.
It's just inevitable in the mining business. The mining business, as I like to quote Robert Friedland, who said the Murphy works overtime in the mining business, and anything that can go wrong will go wrong, and there's always something somewhere. But we should have strong cash flow this quarter, and some of the companies, Barrick is a prime example. Barrick has signaled from the beginning of the year that the fourth quarter would be by far their strongest quarter in terms of production and in terms of costs. So, we'll know soon whether that's true. But I mean, this is something they've been telling the market for a whole year. So hopefully it should be true. Agnico will probably continue to do what it always does, which is please the market. Newmont, I think, will be disappointing. I don't think Newmont's costs are under control yet. I think we're going to have problems with costs at Newmont well into the middle of next year. But most of then you go down the line, Anglo and Kinross and so on, their costs are basically under control. And, with the higher gold price, we should have good margins, good cash flow.
Yeah. Okay. How about B2 Gold?
I think B2 is a great company. They've been hurt, for two things. One is the Mali situation. Their largest mine is in Mali.
Yeah.
The Mali situation has hurt them. And also the new mine they're building, Goose Bay, has had cost overruns. We won't go into all the details, but, I frankly give B2 a pass on that because that wasn't their mining plan. It was the mining plan of the previous owner. I think both of those two situations are contained, let's say. B2 has an agreement with the Mali government. And the problems you're seeing in Mali now, like the jailings of the CEO of Resolute, and then they put 4 Barrick people in jail, these are companies that have not yet made an agreement with the government. But companies that have made, and I'm not excusing them for it, I'm just saying, but the companies that have made an agreement with the government, like Allied and like B2, they no longer, for the time being, they no longer have problems. But of course, when the Mali government puts the CEO of Resolute in jail, well, B2 shareholders get a little bit nervous. That's understandable.
Yeah.
But it's important to recognize that the companies that have an agreement haven't had problems since they made the agreement. And as I said, the agreement with B2 is a really good one to B2 because even though they had to give more of the revenue to the government, it also allowed them to mine around the existing Fekola complex. And they have lots of deposits around Fekola so that they can mine, truck the ore in. They don't have to build new facilities. These are low-cost ounces. And so the agreement gives B2 a smaller piece of a much bigger pie. And without an agreement, they're not going to expand at all. So, and Goose Bay, they've come out with a new plan. I fully expect them to complete on time, on budget, that plan. Solid operators. Yeah.
Okay. What? How do you feel about copper right now? A macro view on copper. If your forecast is correct, and for what it's worth, I completely agree with you as far as moving it towards stagflation. What do you see happening with the copper price?
Yeah. Well, the most important determinant for copper, at least in the near term, intermediate term, is China. What happens with China's economy?
Yeah.
Because China imports 40-50% of the world's copper. And that's more important than EV.
Yeah.
Although some of China's demand is for electrification, of course. But what happens with the Chinese economy is much more important, is the most important factor. I think there's signs that the economy is slowly recovering. I think a lot will depend on how much stimulus we see, which may not be, theoretically good, but it would, at least from a copper point of view, it would help. From our point of view over here, it would be a benefit.
It would stimulate growth for a short period of time and drive the copper price. Yeah.
Yeah. But I still feel very, very comfortable about copper because the point about copper that's important to realize is that it takes a long time for new copper production to come on stream. So we have a very high visibility going forward 3, 5, and even 10 years on what copper production could likely be. So you go out 5 years and you can say with almost certainty that there will not be a significant source of copper in 5 years' time but we don't already know about today.
Yeah.
Right? Some of the copper we know about today, like Resolution in Arizona, may not be in production in 5 years, but nothing in 5 years will be in production that we don't already know about.
Okay.
Right?
Yeah.
So you can make your demand supply models on the supply side. You can have a high degree of accuracy. And the truth is that if China's economy does not collapse, if we don't go into a deep global recession, and the EV is only a half of what projections are, because I don't think we're going to do everything in EV that people are talking about. It's not just EV, it's electrification, generally. But if we're only half what we expect, we simply will not have enough copper to meet the demand at today's price. I mean, there's always they always match, but they match by prices going up.
Yeah.
Supply demand, always, people talk about deficits. There's never really a deficit. You just raise the price and then you don't have a deficit anymore. So the price of copper, in my view, over 3-5 years has to go up unless we enter a deep global recession.
Okay. All right. So buy on callbacks.
Definitely.
Yeah. Okay. Awesome.
And I mean, with copper, I'm focusing more on the larger companies because, a lot of the exploration, it's a tough business. But the thing about copper that's different from gold, as you know, is you can have a gold mine that's maybe 200,000 ounces. It's a small one, 200,000 ounces, and you maybe produce 35 to 40,000 ounces a year for 6 years. That can be a profitable gold mine if nothing goes wrong.
Yeah.
That can be a profitable gold mine. But there is no way on Earth that the equivalent copper would even get anywhere near its production. So a lot of the exploration companies are finding copper, but they're not finding big enough deposits. A copper deposit has to be big. So that's something to really bear in mind when you read about copper exploration companies that have found these grades and these grades. Copper mines need to be big to be profitable. So that's why I focus on the bigger companies.
Okay. All right. That's where we'll start. Thank you, Adrian. Thank you very much for coming.
Let go, stop, you mean?
I know you got a heart out, and I want to respect that. Awesome. Well, be sure to check out Adrian and the Rule Classroom Plus. There'll be a link down below. And any final thoughts? Where can people follow you and your work?
Yeah, adrianday.com is the best place to follow. Now, my final thoughts are, don't forget, the reasons people have been buying gold have not changed. So whether gold has another pullback from here or not is sort of irrelevant to me, to be honest. But the second thing I would say is that gold stocks are still very, very cheap. And that's the majors, the intermediates, and the juniors. We're going to get tax loss selling this year. I don't think it's over yet. Personally, I don't think the tax loss selling is over yet. Pretty much the only stocks anyone has losses in this year are junior gold stocks. So that's where the losses, will be taken. And so we as investors should be alert over the next few weeks and take advantage of that.
Okay. Set your limit orders on junior gold mining stocks.
Very succinctly said, sir.
Adrian, thank you very much.
Thank you. Thank you.
And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy. They can't stop talking about tech stocks. Have yourself a great rest of the day, and we will talk to you next time.